Hey everybody, we're going to get started right now. Thank you very much for jumping on. We are going to be trading the London Open session here right about now. We're going to be starting a little bit early. I'm going to try and wrap up here in about a half an hour. There's a couple of ideas that I'm looking at. It won't take me long to get through it, but I was going to do a live video this week, and sorry, a live video, a pre-recorded video this week. But I just elected to actually discuss some of the things I was thinking here in the live session as opposed to doing a recorded one. Just because I wanted to kind of see how some of the levels were opening up. Anyway, before I get into that, I'm just going to talk real quickly here, show you the news for the week. So the Australian dollar monetary policy meeting minutes had come out here at, this was at 9:30 p.m. New York time, which was a good about 3.5 hours ago or so. So I don't know if anybody saw it, but I posted up to the chat room an idea of the Australian dollar making a run up. You can see in here price dropped a little bit lower, just took out these lows and is now starting to push up higher into these levels up in here. I'm just going to put a price tag on this. I'm expecting some sort of resistance to happen. Ooh, that's a big price tag. Let's just dial that one back a tiny bit. Okay, so about the 74.60 level. That's kind of what I'm looking to see if price wants to run up into there. That would be a fairly big level, and then I would expect a rollover to come in after that. So it's only about a little under 30 pips from now. So I'm kind of expecting price to do one of these. And if we see the U.S. dollar hitting the lows going into London here, we'll probably see that last push, 25 pips or so push higher up into there. So that's sort of what I'm looking at. But I'll get into my thoughts on the U.S. dollar here in about 2 seconds. I just want to talk about that Australian dollar monetary policy meeting minutes. So that's what we're seeing there. And just to kind of look at the economic news driver, you can see the price push down here. That was a couple hours ago, like I say, and then it finally had the release and the reaction rate here in this candle here. So nice little movement there. But I kind of dropped that one in there in the chat room earlier today for people to watch. So is what it is. Anyway, looking into London, we've got a whole bunch of pound sterling news. Bank of England, Carney is getting on the horn, yapping again. We've got the average earnings index coming out, the claimant count change, and unemployment rate, all happening sort of mid-London open, about that 4 a.m. time frame. It's all going to get started at New York time. And they'll be wrapping up there about 4:30. So we should see a pretty decent movement on the pound today. And so we'll be going through the pound, discussing some potential levels where this could stretch to. I've got a couple of ideas in mind that I was looking at that I think could play out fairly nicely, and especially if we do get these, U.S. dollar movement that I think is going to happen, then that should dovetail very, very nicely into the pound. So hopefully we'll get some good movement out of that. Later in the day, New York Open, we've got a little medium impact Canadian manufacturing sales meeting minutes, and then we've got the capacity utilization rate industrial production, and a little bit later on, close to London close, a couple hours away from London close, we have Fed Chair Powell testifying about something or other. So unless he drops a major bombshell that nobody knew about previously, I would imagine that all of the market movements had been priced in well before this time frame, so I can't imagine this is going to affect things all too much. I say that now, and then all of a sudden we're probably going to get fireworks or something crazy is going to happen, a Black Swan event or something like that. And but nah, in all seriousness, it's probably going to be fairly light on what's going to happen here, so I'm not going to worry about that too much, but just keep in mind you could get some later in the day spikes and movements on the U.S. dollar. Some more news going into Wednesday. euro, sorry, some pound sterling news, mid-London open on Wednesday, medium impact views on the. It could be fairly light on the euro this week. I mean, it'll probably just move in sympathy with the pound dollar, obviously, but the euro USD may not make a whole lot of movements the first couple of days of the week here, so just keep that in mind. Now, again, we have some more of Powell testifying the next day. We've got crude oil inventories Wednesday, and of course more Australian dollar news as well too. So we could see some good movement late in the day into the Asian range for Australian dollar on Wednesday. And then Thursday and Friday, some major Canadian news coming in on Friday, so we'll see some pretty good movement there. And you know, a couple of things on the U.S. dollar medium impact news events for Thursday. So all in all, should be a fairly good week shaping up. We should see some fairly decent movement, and as always, and it's going to start out with the pound dollar that I'm looking at here today. So let's jump into that and see where its price is going to take us for the week. So U.S. dollar, we made this high back in here on last Friday. Price kicked up to, the high on this guy here came in at 94.98. My other platform that I use a demo account on came in at 94.97. So pretty much to the pip about the same price action. Price just failed to get higher than these the bodies in these candles here, in a big rejection on Friday, and then obviously we saw price run down yesterday and into today so far as well too. Now I threw a quick level out here. Let's put a price tag on that quickly. So 94.10 is an area where I'm kind of watching to see if we see any reaction at this level. You can see Monday price came down almost to that level and rejected slightly, and then so far Tuesday had opened up and we wicked up, and so far we've been trading softer. So what I'm looking for going forward is a run down further. At 94.10, if price runs any lower than that, I do not want to see it go any lower. Basically, you see the top of this candle right here? I don't want to see it go lower than that. That would be the 93.90 level. So that would kind of be the line in the sand. If price breaks, for me, if price breaks lower than 93.90, I'm going to expect bearish. I'm going to expect a bearish continuation for the rest of the week, and price to potentially challenge this low back down in here again if we run through the 93.90. I think, however, what we're probably going to end up seeing, and as you can see, price is in this tight consolidation range here. It has been creating higher lows, so as price ran out of this long consolidation level here, we created a couple a couple higher lows here. So there's a higher low, there's another higher low. Price ran up out of that, came back down, retraced back, created another higher low, another one here. You can see these two here. So you can see these two here are just slightly higher than the other. Same there. So higher low, higher low, higher low. Came back down, briefly took out this low here, reclaimed this old consolidation level here, and has since traded away from that. And now we're just trading a little bit softer going into the early part of the week, and I'm looking for higher prices to ensue for the rest of the week. Now, whether or not we get above the 95 level, back up again above these highs here, remains to be seen. We do have some equal highs up there. That could be a target. Now, excuse me for a second, guys. My throat's going to bother me. A lot of public speaking, and I do most of it standing up in front of boardroom tables. And I don't know why, but every now and then when I sit down to discuss things, I feel like I get a lump in my throat, and it's kind of hard to talk. But anyway, what was I saying here about this? Oh yeah, so I'm thinking we're going to see higher prices, and basically as prices coming down into London, We're just in the starting of the London Open session here for Tuesday, so I'm going to be looking for some sort of a reaction in and around these levels here. It's about a 20 pip range right around here that we're looking for, and I would expect price to hold off and then to continue running higher to finish off the week. So what I'm looking for basically to kind of sum it all up, this is Monday here. Tuesday, I believe, will create the low somewhere down. It could reject right at 94.10, or it could want to run a little bit deeper. Create the low here in the next few hours, and then I'm looking for this to finish off the week. Now, it's not just going to be a straight line, obviously, straight back up. It, probably run back up into here, probably run back up into the last Thursday's lows. And then, it may want to come back down a little bit, retest, and then, we'll see something like that. So Tuesday, Wednesday, Thursday, Friday, that type of idea. It's not going to work exactly like that, obviously, but you get the idea of what I'm driving at here. So that's what I'm looking for going forward. So we're just going to have to kind of wait and see if price wants to come down to our entry level and see what happens at that level. Now, if price wants to keep pushing down, and then, like I say, my absolute line in the sand, 93.90 right here. I don't want to see price go anywhere lower than that. I'd tolerate just a real quick test, maybe 93.80 at the very lowest. But if this, if I get any, hourly candle or anything like that, so if I go down to the hour time frame here, zoom out a little bit. So if I see any candle come down and close lower than this 93.90, I'm going to switch my opinion, and I think we're probably going to run down underneath these lows here and recapitalize this area down in here before we could potentially run higher. So that's just keep that in mind. Just watch that area. If we do get price, if price does want to come lower than here and potentially retake out this level here, we almost hit it here. That, like, this candle here came in at 94.12, so very, very close, 2 pips off on this feed here. I'll just switch over to my other feed and see how we did on that one. I was looking at that candle right here, and the low came in at, let's see if I can get the price tag to pop up. Yeah, there it is. Low came in at 94.13, so it was off by about a pip from my other feeds. So you get the idea, though. That's kind of the line in the sand, and this level right here, 94.10. We'll see if we get a test of that, and away we go. Now, if price wants to run up and break these highs here, so if we just start screaming up out of here and we start breaking these highs here, chances are that this could be the low. So just keep that in mind. I'm just going to put the day divider on. I don't think it will be, only because this is Monday. I'd like to see the low set on Tuesday. It doesn't have to. Last week, for example, so this was Monday, Friday, Thursday, Wednesday, Tuesday. You can see here, Monday set the low of the week. And then Tuesday obviously ran higher from there. Tuesday, Wednesday kind of consolidated a bit and then broke out, and then, Thursday, Friday. So, don't get me wrong, it doesn't have to set the low, but we didn't really get a big movement off of Monday. See how Monday came in here, set the low, and then reacted very, very strongly. We didn't get that. We kind of just had price sort of sitting sideways. So I kind of think that's going to lend to the fact that we could see this drop down a little bit lower. And as I say, the 93.90 level would sort of be the line in the sand. For me, anyway. So I kind of lost my train of thought there, guys. Sorry. 93. Oh, yeah. Yeah, I was looking, actually, I was just actually looking at time. So the time this one came in, it's set here on this feed here. So this is 1500 GMT. This low here came in 1500 GMT. So I'm expecting a move down right around the same time frame. And again, we could see this come down lower into here. It could be more towards New York Open if it does want to come down. But I'd be hoping it'd be the London Open that we're going to see that push lower. What we could see is something like this, and just kind of a failure swing up in here, and then price push down one more time lower quick, running these lows here, retesting these old highs, and then seeing a bounce. So that would be kind of what I'm looking for the day to finish out. So anyway, you get it. So I think on the euro, on the US dollar, pop over to the euro quickly. A little bit more bullish. And you can see the rejection down here from last week. This was last Friday's rejection, coming down. Took out these two, and this is what I was highlighting here. Same type of idea. Created a low, and then a higher low, higher low, higher low, higher low. And then price slammed down on Friday and took out two of those short-term lows there, just to reject and to start running higher. Now, if I were... if I weren't so bullish on the US dollar, I would say that that was a stop run, and that we're going to see much, much higher prices to ensue on the Euro USD. Now, I was kind of hoping to see that last week. I was actually hoping that price would have continued up last week. Instead, it came down and posted this bearish week. So this is, if I can pull this up here. So that was last week's bearish candle. You can see that right here. Really, all price has been doing on the Euro USD is just consolidating. It's just in a longer term pattern consolidation. And you can see here it's in the same range. Typically, price will, if it goes down to consolidation areas and it doesn't see an immediate reaction, higher in this case, or lower in the case if it was coming from the other end. So I'm not explaining myself very well here. So if price broke up to the upside and then consolidated, broke one more leg higher, consolidated, and then dropped back down to that original area in here, I would expect price to do one of two things. One, it's going to react down into it and then reject completely and run the old highs. Or two, it's going to run back into these areas in here, this previous consolidation area, and chop sideways and create sort of a head and shoulders sort of pattern. And that could be what we're looking at here. So just, kind of an FYI. And then we may see price roll to the downside yet. And again, that would correspond very nicely and dovetail very nicely into the US dollar. If we do see continued bullish action on the US dollar, then that's what we'll see in correspondingly going down in the Euro USD, obviously. So, you can see the rejection that happened here. This was last Friday's candle, and we're moving higher. I think we're just moving higher just to recapitalize the this 2-day where price hung in here, right at the 117.40 level. Price spent a lot of time at that level. So you see this back in here too, right? This 117.40. I'll just maybe put a line on the chart, a red line here. 117.40. Right in about there. Whoops, close enough. But you can see how many times price ran through that 117.40 level in here. And these are daily charts, by the way, daily candles. So price just in a 2-month time frame has spent 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days trading that level in this consolidation range here. So a fairly significant level. Now what I'm thinking here we could see happen is in conjunction with maybe a potential brief run. I'm just going to drop to an hourly. If we do get a brief push lower on the US dollar, we could see a small movement up on the Euro USD, which is only really about 20-25 pips away. So this would be kind of something that I would look to see happen here going into London, and then a rejection. Now, if price starts slamming past this 1740 level, I'm going to drop down to an hourly. If price starts screaming past that 1740 level, just hang on, because obviously we could see a bigger dip in the US dollar than expected. And we could see price wanting to return higher and potentially maybe running out this old high here. So just bear that in mind. That's, you want to put levels on your charts that are, go, no go range. And on Euro USD, for me, it's 1740. If price runs higher than 1740, any hopes of price returning back down and turning bearish are pretty much going to be negated. And we're going to probably end up wanting to run certainly these highs here and then probably that high there. And if that high gets ran, then we could be looking And this is what I was looking for coming in last week, was price to potentially return back up into here and run these highs in here. We didn't get that. We got a failure swing and a return lower. But keep in mind, right now, I mean, that's a fairly bullish price structure that we are creating here, and I'm suggesting something opposite, and the only reason being because the U.S. dollar, I believe we're going to start seeing a move to the upside. And if you look in here, you look at this price structure here, almost very, very similar to this price structure, where we came down, created a couple equal lows, and then price traded higher, scooping up the stops above the market here, and everyone's thinking this thing's going south, and then we had a failure swing here that failed to get under here, and then one less test going lower, and then it exploded up. Same type of idea, right? Price came up, we put in a couple equal lows here, price ran the stops above the market above here, it came back down, failure swing, and now we're coming down for one more test of these levels down here, and we should start to get some reaction at those levels, and then I think we could see another big explosion higher. So that could be a little bit of confluence there. You know, we'll see what happens, but just keep in mind this price model here is bullish from June 15th until current time. That's a bullish price structure. So, right, and again, higher lows, higher lows, higher lows, higher high, higher high, higher high, okay? So I am kind of looking at this saying, no, I think it's probably going to start to roll over eventually, because price really hasn't been going anywhere. It's actually been trading in a 250 pip range, and this is each section between these lines here is a week. I'm on a 4-hour chart here, so it's been trading 1, 2, 3, 4. We're going on to our 5th week now within that 200 pip radius on the euro. So, you know, again, just bear that in mind. But if we see any weakness at this level here, I'm going to be selling into that, and I'm going to be looking for these lows to get ran here. So we'll look at that. But I'm not too excited about the euro. I'm not going to lie to you. It's it's not anything that really excites me too much. I personally think, today anyway, and really the only reason is because of this. It's, again, been trading in that same range. I think the pound dollar has been a little bit more exciting, albeit though this last couple of weeks, again, same type of thing. Like, ever since the US dollar started chopping sideways in this tight range here, it's been making the euro and the pound a little bit more difficult to pin down precise movements, in my opinion anyway. So just kind of keep that in mind if you are trading the euro or the pound dollar. You know, you can get some good movement on it, but you definitely have to, I would suggest being in and out, you know, grabbing 30, 40 pips at a time and calling it a day. I wouldn't necessarily be holding out for big 100 pip ranges on these guys quite yet. So anyways, just discuss the pound dollar here quickly. We are going to see some news come out on the pound, and quite a bit of news actually. And if I can grab this thing here, you can see we had some relatively equal highs in here. That price just spiked up yesterday and took those highs out, grabbed all the liquidity above these guys here, and started to fizzle out. Now it's starting to kind of come into this level in here and create a bit of a base of support. So we could see another drive higher, and all that news. So again, I'll just remind you guys, all of this news right here, we're probably going to see a fairly good movement one way or another on the pound out of this range that it's in right now. And it has been spending a lot of time in this range. You see this here? I'll just back out again. Same as the Euro USD. Really, really working this level right in here. You can see that. Price has spent a lot of time here. So, you know, over the past, since the 20th of June, like we've spent 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 consecutive days, trading days in that, you know, 3-week time frame. So fairly significant levels. The algos are really working price at those levels right now, and don't be surprised if we see this continue for a little bit longer. But what I'm suggesting on the pound dollar would be going into this London. If price, again, same idea, if price rolls lower than here, we're going to see price start to run and make a run for I would suggest these lows in here. So I'm going to put this on the chart, and I like the 31.45 level. I'll just get an exact level on that there. Yeah, you could do that, about 31.45 as a target. So it's about a little under 100 pips from here, from current spot. I'm not going to be interested in taking any position on this until we break lower than this consolidation area here. Now, this could be a perfect time to sell into it, saying, well, you know what, price popped up here, it failed, and now it's going to start to roll over, so get short. Yeah, you could do that. I'm going to elect for the news to come out. I think the news, we could see a quick spike higher, and we could retest. I mean, you see how price came in, wicked up, and then failed, and retested once in here, failed again, came back up, and so far it's failing again. It kind of leads me to believe that this could be the high, but they could spike it real quick, and I don't want to be on the wrong end of a price spike. So do one of two things. You could certainly get short right here, but your stop, in my opinion, because they could, keep this in mind, they could spike this thing all the way back up to here. I'll put a price tag on that. See this consolidation level up in here? I'll just try and get an exact level on that one as well. I kind of like the lows in here, which is about, call it 33.25. Let's move that over here. Close enough. So just keep in mind, I mean, that's a big move, right? I mean, that's almost an 80 pip move in the wrong direction of where I'm thinking price is going to go. The news events that are coming out, they're not that high impact, I don't believe, where, you'd see, like an FOMC or a non-farm event where you just, quick price spike, like this, right? I don't think we're going to get that, obviously. It's interesting, actually. I just kind of saw something on the chart here. I'm going to dial this in a little more accurately. You know what? We could use the bodies as well, too. Works a little bit better, I think, with the wicks. But what I'm driving at here is, you see this area in here, how price ran up, spiked back down, and then consolidated. And what did it do? Price came back all the way down, traded all the way back down, and came right back up to about the middle of this range right in here. And so far we're seeing weaker prices. That, to me, folks, is a repeatable pattern that I was shown before in the past, and I believe we could be seeing the same thing happening here. So price does a move like this, it consolidates, and really it just finds, really all they're doing here is they're just running stops below the market and above the market. Price doesn't go anywhere, it chops sideways, and then it finally picks its direction, trades off of it, and everyone who is, coming in here is thinking, oh, they're going to, coming down here, they're getting short. They're thinking they're going to drop this price all the way down, and then they run it right back up, right to the middle of this consolidation range, and then drop it back down again. And all the guys who were short in here were right, but they were taken out of the market for this quick run up, and then just to watch price run all the way back down here again. So we could be seeing something like that occurring. But just keep in mind, guys, there are a couple of levels above price here. And again, if we don't see that drive higher on the US dollar, then the pound dollar, we could see a return higher. So just okay, so I guess I gave you levels, line in the sands on the US dollar and the euro. Let's do it on here. In my opinion, let's say you did go short in here. So let's put a price tag on that. I'm just thinking out loud here for a second, guys. So I'm just trying to get kind of some levels on the chart. So let's say let's just say 132.50 for argument's sake. I mean, that would be a 75 pip minimum stop that you would need on this thing. I would even say an 80 pip stop. I don't like trading with stops that big. If I'm going to do a swing trade and my target is 500 pips out, yeah, you could easily do an 80 pip to 100 pip stop, and that's a nice 5-to-1 risk to reward to risk ratio. Absolutely nothing wrong with that. However, I'm not seeing a move like that coming out anytime soon. Eventually, once the U.S. dollar breaks out of the consolidation range, yeah, we're going to get 500 pip movements on things like the pound dollar. But so far, same as the euro, it's just kind of been stuck in this range here. Bigger range for sure. It's about a 300 pip range, but it's still stuck in this range. So okay, I would suggest that if you did decide to go short, I would maybe wait for a little bit. If price does start to want to run through the 132.30 level, you could probably go short on that one. If we go lower than that there. But I would, while price is up in here, I would maybe elect to wait for a little bit just to see if that news doesn't want to drive price up to run this liquidity. This, in my opinion, was a stop run. You can see they ran it up and rejected sharply and traded softer. And then we have the manipulation in today. But in keeping with the whole theme of seeing, Tuesday being the extreme maximum of price, whether higher or lower, we definitely haven't put that in yet. So, we're going to have to kind of wait and see. I'm just going to kind of wait on this pair and see. My bias is to the downside, so if there's any movement higher during that news event, I'm going to be looking to sell into it, me personally. But just keep in mind, price could want to tag up to 133.25 before it resumes lower. So that's a big move higher. So if you do decide to get short, you definitely want to make sure your stop is above that. And I personally, I'm not looking for 500 pips or even 300 pips for a 3-to-1 trade on this movement down. So I would elect to just maybe hold off till you see that news release come out. And I always do that. I'm a very cautious trader. I always elect to be err on the side of caution. And by that I mean, if I'm going to get in at a level, so let's just say, for instance, I think, the level could, price could reject and start to roll over and go to the downside anywhere from 132.50 to 132.80. I'm more of the opinion I'll watch and wait to see if I can get in at 132.80. And, 70% of the other traders out there are getting short at 132.50, and they're not worried about that 30 pip drawdown, and they're just going to watch price roll over. Good for them, and I miss a lot of moves because of that. But I also minimize a lot of mistakes when price just keeps going past 132.50, right? So that's, but again, it's just kind of everyone's personal trading styles and habits, and you're comfortable with what you're comfortable with. But that's kind of my target. I'm looking for continued downside. I kind of like this entry here, but I'm just, like I say, I'm just sort of the opinion where they could want to run it higher. And the only reason being just because there's a little pocket of price up in this area at 133.25 where they could want to run prices just above these highs here, and we could see them driving into that as well too. Let me just do that'd be a 30 pip stop. I mean, if they were going to do a stop rate up here and above here, that'd be about a 20 to 30 pip range above these levels here. So keep that in mind. Anyway, watch the pound dollar, and I'll come back to this here maybe in a few minutes. I'm about a half an hour into this live session already here. I don't want to take too much more time with you guys, but I'm gonna come back to this one here. Euro GBP chopping sideways as normal. Nothing new to report there. I'm not even going to touch this pair. And usually, again, I use this as a hedge for what the fiber and cable are doing, but I mean, they're just manipulating this market. More of the same, and right, more of the same, more of the same. So, yen, oh, yen had a nice break, nice pop up here into last week. I honestly don't trade yen. I haven't even looked at it. Nice movement higher though. US CAD, if we see that movement higher in the dollar, we should see a movement back higher on the US CAD. There are equal highs right up above price right there, and there are equal lows right down here as well. So just keep that in mind. I was actually looking to go short. There was some interest rate news on the Canadian dollar last week, and I talked about this a little bit last week. I wanted to get in on this spike here, short, and you can see price dropped a nice 100 plus pips to the downside, and then just kind of rolled back up, and now it's just been trading softer ever since. I think they're going to go for those lows. I think they're probably just going to cap these lows and run them right about here. And I'll bet you they'll probably come down somewhere in correlation to the tops of the highs right there. Somewhere in and about there. And they'll probably reject and then run higher. So we'll watch for that. So far, nothing that I want to, nothing that interests me. Like this price action right here is very, very choppy. Nothing too pretty. But if price does want to return, if you are a Canadian dollar trader and you see price trade back up to 133.30, I would probably be inclined to go short there. And if price pushes any higher than this small 5 candle consolidation here on the hourly, if it pushes any higher than that, you can pretty much cancel that idea, because they may want to run it higher than here and higher back up into here without going lower and running those lows there. So just keep that in mind. But I do like lower on US CAD for the interim, and mainly only because the Canadian dollar has done some monetary policy changes here as of last week, and so they could be they're raising interest rates, so it could start to offset as the dollar is chopping sideways. It could manipulate the Canadian dollar lower for the interim until the US dollar starts to make its bull move again, and then you could see prices finally locking into step with the US dollar and running higher. So that's sort of what I'm looking at on US CAD. But yeah, I kind of like that, I'll be honest with you. But like I say, if price runs any higher than this consolidation area, nix that idea, because it's probably going to run up above here. But that could be something potentially for the week on US CAD. I'll be watching that. Nothing huge, 60 pips, 60, 70 pip for a run down here. Might get, like I say, maybe a 10 pip stop run underneath the levels in here. And so if you did get in there and price went all the way down there, yeah, it's about 80 pip. That would be a nice halt on the US CAD for the week, in my opinion. Crude oil. This is interesting. Any crude oil traders out there? Guys, if you have any questions or anything, the chat's open too on the left-hand side here. I will keep an eye on that. But if you're a crude oil trader, I told you guys up here, don't be buying, because we could be going. And that's exactly what price did. I said 68.40. Sorry, it wasn't. It was 68.70. It was actually this candle low right here put into it. Missed. Sorry, 69.20 was the low. I said it right about there. 69.20 was going to be the low. Or I want to see price come down to 68.20. Sorry, what am I talking about, guys? Let me just get a better level on that. 69, I said 68, 69.20. I figured price was going to run down to that level. It ran through it there. Brief rejection, and then came smashing down yesterday, Monday's trading. And I said my line in the sand was 68.40. And this is why you got to watch price when it comes to these consolidation levels to see if it wants to bounce or trade through it. 68.40 was my line in the sand. It closed down there, smashed down there. I'm looking now at 66.30 for price to come down to and run down to. Now from there, it gets it gets interesting at these prices. If 66.30 gets broken and we see continued movement to the downside, I think these levels could come into play again. Right down there. And I've had my eye on these levels for a very, very long time now. As you can see, price did not want to come back down to it. But technically speaking, we shouldn't see price go lower than this. If price goes lower than 66.30, it means that, well, this is them pricing in all of the, Iran, Iraq issues, the disruptions, the increase in supply, the sanctions, the this, the that, the other thing. If price runs lower than 66.30, basically what that is going to mean is that Russia and the U.S. are flooding the market again with oil, and they are going to bring prices much, much lower. It's really all it is. I have been following a lot of news on oil, and I'll be honest with you, oil is my business, and I mean, I trade it all the time, and I'll be honest with you, there is so much geopolitical, news drivers and tariffs and trade wars, and it just boggles the mind, the amount of information that's out there. I'm not and this is one of the main reasons why I'm not a fundamental trader. How do you know what news is correct? Media outlets, they tell you what they want to tell you, what the regulators want them to tell you. And the most recent case in point example of that is the news medias had come out and said that the increases to production were actually a lot less than what they in reality were. So they came out saying, oh yeah, there's only going to be a 800,000 barrel per day increase in production. Well, this does not constitute an 800,000 barrel per day increase in production, right? That's not what, that's a, what are we? 4 plus another 2. So $6, $7 movement down. I don't think so. That's not, anyway, so I just, you got to watch the information that's coming out, and I'll be honest with you, especially with crude oil, the information is plentiful. So going forward, I think we're going to go lower than here. I'd like to see, and I'm just going to switch now to an hourly, I'd like to see price actually, before it starts going down to that level, to come back up to here and reject. And then I'd be looking for shorts in this level here, or maybe these levels here. That could be a return. You see these levels here, and then these lows in here. Somewhere in this neck of the woods, I would suggest that we could see a return in, and so 69.80. I like that level. And the next one at that, obviously at that low right there, which is about 69.25. So one of those two levels, I'd like to see price return back to there, and then see some resistance, and then roll over from, and I want to see that 60, what was it again? 66.30 level traded to. That, in my opinion, is what would be, that would be a great setup. I was looking for that same thing in here. We didn't quite get the deep enough retrace higher. I was looking for price to return back to this level here. Didn't quite do it, fell short, and then really fell off, obviously, starting this week. So I would like to see a bit of a run higher, and then eventually, price tagging out this level in here. So that'd be a great trade in my opinion. If you are an oil trader, by all means, make sure you put a trade in your demo account. This is does not constitute as advice or anything in any way, shape, or form to trade live funds. I am not a licensed oil trader or anything like that, commodity trader, so this is my opinion only, and to be taken as such, I am only trading in demo accounts. Any trades that I take, obviously, are all demos for the point of illustrative purposes only. So there you go. That's my spiel for the day. The legal stuff, and you can see here too, actually. You see these lows right there? See those equal lows? Just took them right there. And there's lots of area back down here. So we should see a movement higher. For this price spike down here, I would expect a little bit higher movement before it starts to roll over. Hope we get it. It may not. And that's the one thing about oil too that drives me crazy is sometimes price, you think you're going to get a deep retracement. Like in here, when price came in, created two double bottoms, those equal lows there, and then just smashed price up. Didn't get a retracement back down to these levels down here that I was looking for. It happens. We could be seeing the same thing here. But I am expecting price to trade through no matter what. So, this is the same type of idea as that pound-dollar trade I was telling you about earlier. How price, we could see a variance of 80 pips from where the high could get set in. There's a couple levels that I'm looking at, especially with the news coming out. Same type of deal with crude oil. It's one of those things where, yeah, you could go short right here at 67.80, but be prepared, that price could run up $2 against you. And, at $10 per contract, or sorry, $10 per penny per contract, that's a potential $2,000 movement against you. So, if you've got a great big account, have at it. Put your stop above here. If not, I would maybe wait. But that's just me. I just don't think the retracement, this little retracement rate in here, I don't think that was enough to do it. I think we could see a move higher. At the very least, this candle right here, which the low came in at 68.93. That may be, we may run up to 68.90. That like I say, at the very, very lowest, I'd get short at. But I don't want to see price roll down from here. I'd like to see it come higher. So, anyways, that is pretty much for Forex and commodities. Oh, copper had a nice price spike. So copper came in, finally set those lows that I was talking about, and now we're just kind of chopping sideways. And get rid of this. This is just... So far, so good on copper. Now, keep in mind, guys, if you do get stronger price in the dollar, it will make currencies a little bit, commodities a little bit weaker. So just keep that in mind. But we are coming into a seasonal. I'm pretty sure you all remember me talking about this, about a potential bullish run in the seasonal trend of this commodity. You are doing one of two things here, guys. They are either running these stops above here and they're going to drop price even further, or price is going to slowly start to break out of this range. So we'll see what they want to do there. But nothing on copper yet. Ooh, cocoa had a nice little news event here. Something I'll have to check and see what happened to cocoa here today. That's interesting. Nothing on coffee. Orange juice is making a break again. Didn't quite get down to the level I was looking for. I was looking for 151 to get kicked, but it fell short. Sugar had a nice spike. Took out the lows from here, though. Nat gas. So this is interesting. I was calling this level down here on nat gas. Now, I'm reading some news reports, and again, this is where fundamental trading starts to conflict with technical trading. I'm trading nat gas purely off of this price chart right here. And I'm saying price had come in, consolidated, and started creating higher lows ever since the end of March. We broke out of that price pattern just to come back down and deeply return back into it. Now, I could take a quick fib and say from the high to the low. You know what, I'm not going to use the wicks. I'm going to try to get the bodies as much as possible. So from the high to the low, we could see price return back to the right around the 50% range of that consolidation range. Option number one, if I'm a pure technical trader off of price action. Here's the thing, fundamentally speaking, there's a lot of drivers apparently that are right now driving down the price of nat gas. We may not see any bullish activity on it until the end of the summer, so price could continue to trickle down south a little bit further, but price is really narrowing in on that range. I was looking for some kind of a reaction in these areas right here, and so far Monday put in a nice wick. So, sorry, that was Friday's trading, not Monday. Oh no, I'm sorry, that was Monday. We started a new candle. We're on the 17th now. So that was Monday's low right there. So we're going to see. I want to see if price has any willingness to get above 278, basically. If we see price getting above 278, then that could signal that this was the low, and we could see higher prices running through the rest of the week for nat gas. So we'll be watching for that one. Bitcoin, crypto, etc. Nothing really that excites me on those guys as of yet. And this US-China, US yen pair, I just started watching this as well too, just because of this big lead up into here with these trade wars. I wanted to see what price is going to be doing. So far we're seeing price stall out a little bit. This is a weekly chart. So far we're seeing prices starting to stall out a little bit right in here. So we'll see what they want to do. They may want to reprice a little bit lower, but so far it's making a nice push. Took out the old highs here convincingly. So we could see much higher prices on this, which would mean stronger dollar, weaker yen. So I guess we're just going to have to wait and see. So far, price really isn't moving a whole ton right now. It's kind of just been chopping sideways for the past hour or so. Nothing too crazy going on. So you got the levels that I'm looking at here. Euro I'm going to leave. I don't necessarily, like I say, that 1740 level would kind of be the level that I'd be watching to see if they want to push higher or not. But we should probably start to see price hit that here fairly soon. Pound, again, I'm just waiting for that news to release. Any bearish movement, I'm probably going to be selling into that. And talked about US CAD briefly, 31.30. And crude oil, I want to see a bit of a retrace before I get short on that. So we'll go from there. But anyway, that's kind of the prices there. So I just sort of wanted to take maybe 30 seconds and just kind of discuss, you know, a potential for some shift in market structure that we may see. So with all of the tariffs and everything that have been implemented, basically last Friday, Trump imposed tariffs on about $34 billion of Chinese imports. It started at 12:01 Friday in Washington, and which is basically just after midday in China. And then another 16 billion of goods could be following in the next couple of weeks. So, you know, the final could get way up there. Like, what they're actually talking about of putting taxes on for imports from China, it could get all the way up to $550 billion. I mean, and that would literally exceed all of what the U.S. imported from China in 2017. So, I mean, it's a gigantic number of what they're potentially looking at putting tariffs on here. So China fought back right away. Obviously, I mean they imposed tariffs of their own, and they did a total of 34 billion as well too. However, China, I believe, has a lot more to lose from the tariffs than what the U.S. dollar does. But at the end of the day, I mean, it could be a big transition coming in here for the global market. And you think about it, I mean, these tariffs, all they're going to be doing at, if the U.S. starts to put a drag on all of the stuff coming in, then that just means that the cost of those goods are going to go up for the end consumer. And if all of a sudden, the U.S. China starts paying more to export, and the U.S. citizens are paying more for what they import, it's just going to start reverberating around the globe, and it's not going to take very long for look at NAFTA. Look at what the U.S. is doing with Canada and Mexico. Same thing. They're just basically starting to really tax heavily all of the commerce that they're doing. I mean, and eventually, the rest of the world is going to catch up. So, at the end of the day, it's going to lead to, I believe, in inflation. Tariffs usually, when they get passed on to the customer in the form of higher prices, it just starts to lead to inflation. So, and it already happened when he imposed tariffs back in January on laundry machine imports, jumped nearly 10%. And it's the biggest jump in over 10 years. And at the end of the day, it just got reflected back onto the people who pay for it, the end user. So really, all I'm driving at here is if we start to see the trend of higher interest rates, we start to see the trend of tightening monetary supply, we start to see the trend of these tariffs kicking in. Now, don't get me wrong. I mean, tomorrow, Trump could come in, strike a deal with China, and completely eliminate all of these tariffs completely. And this will all be a thing of the past, and it's business as usual. And, maybe commerce will surge, and all of this will get left in the dust. That is definitely a possibility. Look at North Korea. I mean, Trump was ready to go to war with North Korea back in January. Back and forth with the leader of North Korea, and then all of a sudden now he just signs a big peace treaty, and things are hunky dory, and they're all buddies, and she's got South Korea on board and Japan on board, and everyone supporting each other, and hey, everything's all roses and rainbows and butterflies. Totally what we could see here. But right now, if the path continues to these tariffs kicking in and increasing the prices across the board, and you see, the Federal Reserve, increasing interest rates, and you see inflation happen, what you're going to eventually see is an exodus from stocks. And if you start to see the stock market take a tumble, you're going to see money flood into things like bonds. And the such. And so really, I mean, the bond market is one of the largest financial markets in the world. I mean, it exceeds the entire global stock market. So, I mean, bonds are absolutely giant. So it just basically means there's a lot of interest-paying debt out there. And right now, the U.S. 10-year bond, the yield is 2.85%, and the 30-year bond is 2.95%. So basically, all that means is that investors lending the U.S. money are being offered practically no additional return for an additional 20 years. From a 10-year to a 30-year bond. So I mean, it's crazy, right? I mean, it's an anomaly right now. And it makes absolutely no financial sense. But like I say, if this trend of the tariffs continue, that could all of a sudden start to turn around, because everyone will be flooding and running away from stocks. Because, I mean, again, higher prices and higher interest rates and inflation, it tends to take a toll on the stock market. And if money starts pouring out of there, it will go to safer securities such as bonds. And we could start to see some movement in bond territory. So just keep that in mind. Now, right, I mean, this isn't going to be permanent. This isn't going to be something that's going to, take place, for the next 20 years and we're going to go into a global recession or anything like that. I'm not suggesting we're going into any recession. So far, the economies have been fairly good across, to scale across the world, and this last little hiccup seems to be coming to an end here, and things are getting stronger. But I'll tell you, Trump is definitely mixing things up right now. And I mean, the capital markets are always in a state of perpetual competition for capital. So, money flows where it needs to best be utilized. And right now it's in the stock market. And if things start to, these tariffs start to heat up and these trade wars really start to kick in, you could see some of these companies, getting hurt. And that's going to hurt the stock prices, and we could see a bit of a decline. So, and you look at the S&P. Look at this thing. I mean, this thing was hitting lows. I mean, it literally took out the lows. So I'm going to just pop off to a weekly here. You can see, I mean, the price came down and hit these lows back in January, and failure swing back in here, retested, and now we're about to potentially take out this old high here, an all-time high from 2017. So what happens if price fails in here, though, right? What happens if we do get that failure swing and we start to see lower prices? If they don't start taking out this high again, I'm going to assume that's what could pan out, and we could see much lower prices in the S&P. So just just so you know, just so you're aware. I mean, just so it doesn't keep you blindsided or hit you on the side of the head, and you didn't see it coming. We could see a bit of a dip and a bit of a change from the norm here, going to finish off the end of the year. But anyway, that's kind of all I wanted to say. There wasn't a whole ton of... I don't want to get into a whole ton of, geopolitical news and what ifs and this and that and everything else. I kind of like to keep my thoughts based primarily on what price is doing. What are the charts telling us? What are the technicals doing? Where's price at? Where's it been? Where's it potentially going? At the end of the day, I think that's the best dictator of price, because really, you get somebody like Trump in there, you get some kind of, crazy war that breaks out or whatever. Those things are temporary. They come, they go. There's always news like that to affect the markets, to spike price up one way or another. But ultimately, price doesn't lie, and, the algorithms, they're already set. I mean, it already knows where it's going to take price. And I believe we're probably going to see higher prices on the U.S. dollar. So could be lower, on the short term, but I think long term we'll probably see continued higher prices in the U.S. dollar, at least while Trump's in administration. Anyway, so that's about it, guys. I don't want to take too much more time. I've been on here now about an hour and a little bit longer than what I wanted to be on. So if you're with me this far, thank you very much for joining us. And just so you know, Dave is on holidays this week. It's summertime. He's taking his kids, and they're gone somewhere nice and enjoying their time. So he will not be doing a New York session on Wednesday. So if one of my other analysts don't have time to do it, I'll jump on and I'll see what the markets are doing for New York Open on Wednesday morning. Be a short session if I do jump on, but just keep you posted on that. And Friday as well, same thing. Dave will be away. He'll be returning next week, so things will be back to normal then. But just, obviously summertime, people's schedules and everything are subject to change. And so just to make you aware that I could be doing all the live sessions this week. But if I don't have another guy to do it for me, I'll let you know. So anyway, we'll be live again, myself or someone else, New York Open on Wednesday, and I will post the link, give you guys lots of time to prepare for that. So all the members and everyone else, you'll be getting some signals coming your way via charts here probably as soon as this starts to move. We're looking at here, we are about 2.5 hours away from price starting to move on the pound dollar. So I'll keep you posted on that one as I see it, and we'll go from there. Other than that, you've got all the other levels that I've been looking at, so I will leave that one up to you guys. Hopefully you guys have a great day of trading Tuesday. We'll catch up to you on Wednesday. Take care.